Welcome back everyone to the Audacious Money Witch channel, where we talk about investing and trading and a lot of fun things. As we just witnessed Nvidia falling from grace, there is a good reason for it. It's not because Jensen Huang signed her top. Meanwhile, AMD just reported earnings. In this video, I'm going to share my opinion on AMD's report and explain why ARM stock is taking over as the preferred Gen AI hype train, rather than good old AMD stock in 2024. AMD stock has experienced a roller coaster ride over the last few years. It surged over 125% in 2023 before pulling back sharply since the start of this year. AMD today announced revenue for the second quarter of 2024 of $5.8 billion, up 9% year over year, gross margin of 49%, net income of $265 million, and diluted earnings per share of 16 cents. We delivered strong revenue and earnings growth in the second quarter, driven by record data center segment revenue, said AMD Chair and CEO Dr. Lisa Su. Our AI business continued accelerating, and we are well positioned to deliver strong revenue growth in the second half of the year, led by demand for Instinct, EPYC, and Ryzen processors. The rapid advances in generative AI are driving demand for more compute in every market, creating significant growth opportunities as we deliver leadership AI solutions across our business. Record data center segment revenue of $2.8 billion was up 115% year over year, primarily driven by the steep ramp of AMD Instinct GPU shipments and strong growth in the fourth generation AMD EPYC CPU sales. Revenue increased 21% sequentially, primarily driven by the strong ramp of AMD Instinct GPU shipments. Client segment revenue was $1.5 billion, up 49% year over year and 9% sequentially, primarily driven by sales of AMD Ryzen processors. Revenue growth in data center and client segments partially offset by lower revenue in gaming and embedded segments. AMD executed well in the second quarter, with revenue above the midpoint of our guidance, driven by strong growth in the data center and client segments, said AMD CFO Jean Hu. In addition, we expanded gross margin and delivered solid earnings growth while increasing our strategic AI investments to build the foundation for future growth. For outlook guidance, for the next quarter, AMD expects revenue to be approximately $6.7 billion, plus or minus $300 million. At the midpoint of the revenue range, this represents year-over-year growth of approximately 16% and sequential growth of approximately 15%. Non-GAAP gross margin is expected to be approximately 53.5%. ARM Holding is the British chip designer that trades at a lofty price-to-sales ratio of 50, higher than mighty Nvidia. Less than a year from its IPO last September, ARM stock has tripled. What are the main reasons for it to keep gaining? Let's take a look at a few of them. ARM has an accelerating growth rate and long-term potential in AI chips. ARM Holdings does not sell chips. It develops CPU architecture and IP that it licenses to its clients. I believe ARM will remain the dominant architecture in smartphone CPUs, where it has 99% market share, while maintaining high market share in other mobile chips and battery-powered devices. ARM is also making inroads into the data center, where we expect it will gain market shares versus x86, the dominant architecture where AMD and Intel are using. Tech companies use ARM's architecture to design their CPUs and other chips. Once the chip is designed, the client can sell its own device, like Apple's iPhone or Samsung Galaxy, or sell chips to other device makers, like Qualcomm, which provides CPUs to smartphone makers. On top of licensing fees, ARM gets a royalty percentage of the value of the chips shipped. If a $1,000 smartphone has $50 of ARM content and ARM charges 4% royalty rate to that customer, ARM gets 4% of the ARM content, or $2. ARM's unique business model means revenue is set to surge. ARM operates differently from most of its semiconductor peers. Rather than selling its chips to end users, ARM designs architecture it then licenses to chip partners like NVIDIA, Apple, and Alphabet. Additionally, its monetization model is also unique. The company brings in revenue in two ways. First, it generates licensing revenue when it signs new licensing agreements with its partners. However, the bulk of its revenue comes from royalties when its partners actually sell the products built on ARM technology. Royalty revenue generally lags behind new license agreements by 1 or 2 years, which means that ARM should see a boom in royalty revenue over the next couple of years. As it's seen a spike in new license agreements, license revenue jumped 60% in its most recent quarter, driven by surging demand for AI, and ARM's new V9 technology also commands a higher royalty rate, which should help drive expanding margins as well. Its competitive advantages are getting stronger. ARM rose to prominence thanks to its power-efficient architecture, which it's prized in devices like smartphones, where battery efficiency is superlative. That's why ARM's designs can be found in 99% of premium smartphones around the world. However, that efficiency advantage is also proving to be valuable in AI, as large language models and other AI programs use enormous amounts of power, making ARM's architecture especially valuable for data centers. To meet growing demand for AI components, ARM has also launched Compute Subsystems, CSS, which are prepackaged configurations of the company's technology designed for specific end markets and use cases, opening up another valuable revenue stream that should help it meet the large and growing demand for AI hardware as the business world is racing to deploy its own generative AI models. As ARM benefits from the jump in royalty revenue, demand for its new V9 architecture, and the growth of the AI data center, plus NVIDIA attempted to acquire ARM Holdings for $40 billion in September 2020. It was intended to combine NVIDIA's AI computing platform with ARM's extensive ecosystem to create a leading computing company for the AI era. This explains the hype in ARM stock, but in my opinion, 20% revenue growth for a price to sales ratio of 45, that doesn't add up at all. Reasons to stay away for now. If ARM manages to charge royalties on a per device basis, or if it were to meaningfully increase its royalty rates per chip, it could become a double-edged sword. Too much royalty revenue may encourage customers to adopt open source RISC-V instead. ARM China is one of ARM's largest clients, representing more than 20% of revenue. Financial reporting by ARM China has historically been opaque, and there could be attempts to steal intellectual property from ARM Holdings. ARM's revenue concentration is very high, with the top 5 customers representing close to 60% of sales. AMD's fortunes have been closely tied to the AI megatrend. While the company faced headwinds earlier this year due to export restrictions on AI chips, the launch of its flagship MI300 AI accelerator has reignited investor interest. This, coupled with a resurgent PC market, positions AMD for a strong quarter. The data center segment is anticipated to be at the key driver, building on the impressive 80% growth seen in the previous quarter. Despite the positive outlook, AMD's stock price has faced challenges due to the broader market volatility. AI chip dominates AMD earnings focus. AMD's GPUs offer a lower total cost of ownership, making them an attractive option for companies looking to cut costs without compromising on compute power. Coupled with EPYC processors, AMD asserts that its solutions can reduce AI spending by about 40% while delivering equivalent compute performance to top alternatives. Looking ahead, AMD plans to continue expanding its GPU line with MI325 and MI350 in the next 2 years, and MI350 is expected to directly compete with NVIDIA's Blackwell 200. Following the launch, AMD increased its revenue forecast for this segment from $3.5 billion to $4 billion for the year. If AMD's AI chip sales outperform expectations by year-end, the stock price could see a positive impact. Post-earnings, the focus will shift to updates on AI chip demand. There are several strengths for AMD stock: expected annual growth for net profit, liquid assets exceeding short-term liabilities, potential for high returns in the long term. Technical view: risk of a double top formation persists in the past 2 weeks. AMD has begun to trade below the ascending trend line that originated in October 2022, signaling a potentially negative trend. Historically, AMD has found support at 89 EMA on the weekly chart during correction phases. Currently, it may find intermediate support between $130 and $133. If AMD breaks below this support range, it could decline to the 0.618 Fibonacci retracement level at $120, calculated from the long-term trend. Another bearish indicator is the risk of a double top formation this year. Although the peaks aren't of similar size, reducing the pattern's reliability, the $140 level acts as a critical border. For AMD to regain upward momentum, the stock needs to rise to $160 range in the short term. This would negate bearish signals and suggest a return to the uptrend, attracting more buyers for a quicker recovery. This could trigger an upward move towards $190 and potentially $220. However, if AMD remains below $160, it is likely to continue forming higher lows amidst current volatility.
I do think this is a long-term arc, so people are always expecting things that happen overnight. This won't happen overnight, but the time to invest is now, so that we see the payoff in the 1, 2, 3, 4, 5-year time frame.
The M1300 and the guide to $4.5 billion that Jim pointed out that I think is being embraced by investors. I've had a couple this morning actually ask why it isn't even higher. Given if you annualize the quarter and you add in a growth rate, it would seemingly get you perhaps as high as $5 billion. Are you being conservative?
Well, David, the way we look at these things is, we call it like it is today. And we wanted to go through some of the key milestones. So the fact that, we're sitting here at the middle of the year and calling, over $4.5 billion for the full year, I think is a great place to be.
Something about a high bandwidth memory problem that had you losing some yield. It was not you. It was related to a supplier. Was that an issue that's been resolved, or is there anything you can comment on or clarify?
David, I would say that there's a lot of noise in the system, and I would really not pay attention to those kinds of things. These are extremely complex products. I mean, MI300 is like over 150 billion transistors. Of course, we're always working things real time, but as far as, we look at this is a very, very successful production ramp. We're very excited. We're seeing MI300 now in our customers' data centers in volume, running production traffic, giving great results, and that's what gives us the confidence for the growth trajectory in the second half of the year.
In conclusion, I still believe in AMD in the long term. What's that, Ted? So the reason why Nvidia is falling so much is because Jensen Huang is selling heavy at the top. Is that correct, Ted? Yes, that's correct. Are you excited? Oh, he's excited. Oh, yeah.